everyone. Thank you so much for joining us for today's Appraisal Buzzcast. We have a great episode for you today, but with me as always is our host, Hal Humphreys. Hal, how are you doing?
I'm doing great, Jim. How are you today?
I'm doing great. Well, we have a great guest today. I'm going to bring him in. We're talking with Keith Murray, the CEO of PCV Murcor. How are you doing, Keith?
I'm well, Jim. Good morning. Hal, good morning to you.
Good morning, Keith, and
Or afternoon, wherever you may be.
thank you so much for being here. I'm in Nashville, Tennessee. That's where the headquarters of the Appraisal Buzz is. So we've got some office issues today. They've cut the power off in the building. They're replacing some things. So I'm coming to you live from our home here in Nashville, Tennessee. Keith, real quick, for those of the people in the audience that don't know who you are, how did you get into this real estate appraisal industry?
Well, that's a great question. Like a lot of us that become appraisers, I think it maybe found me. I've only had one other job, other than the jobs that I currently have, and that was working in the mailroom back in the early '80s at a place called Home Savings of America. So It was there when I worked delivering mail to executives to different departments throughout the organization. Went from there to going into a teller line and working as a bank teller for some time, and then learned of something called appraisal. And at the time, Home Savings offered appraiser training. And so this would have been, 82. I went into appraisal training and got field training from them. And then lately, much after that, interest rates went from whatever they were, 8% to 12%, 18%. And so I found myself in a full circle moment in my career. And I was back in the teller line after spending a year as an appraiser. And so had an unfortunate incident as a bank teller where I got held up and then got real clarity on my career and decided I was going to start a company that was then called Pacific Coast Valuations, providing residential appraisals throughout Southern California. So that's the quick part.
When you started Pacific Coast Appraisals, what year was that?
Pacific Coast Valuations was 1981.
Okay, so 1981. This is pre Fannie Mae 1004. This is pre FIREA. What was it like back then?
Well, I think I was 14 years old, just to make that really clear. But we had 1004s then. When we did the training, we had what we called flashcards at Home Savings. But right around that time, we had the 1004s and the 1024s and 1065. So we were pretty much in the same environment that we are now. The biggest difference was, of course, technology was very different. There was a different attitude in terms of appraisers and how we were viewed and our access to information and our clients' access to information. So I think that over time, that's really what's been what I've noted as being a big difference. I'm not a practitioner any longer. I mean, I probably missed, as I was sort of talking about my path, is that it was probably in the mid 90s that I started PCV Murcor in response to clients that said, hey, we like the service that you give and how you manage resources. Can you offer those same services in Nevada? And so we sort of expanded the management platform and really flipped it from being an appraiser platform where we had appraisers that were employees doing those assignments in the local market to actually using that staff to perform QC services and then look for a network and built a network really manually, before we were able to leverage technology that's available now.
Wow, that's awesome. Well, again, Keith, thank you so much for being here. Let me take a real quick break, give a shout out to one of our sponsors, and we'll be right back.
The Dictionary of Real Estate Appraisal, 7th edition, is a landmark text that reflects the depth and breadth of appraisal knowledge. Each entry, definition, and reference has been painstakingly researched and designed to reflect an expert understanding of issues that currently impact the profession. The new dictionary is an essential authoritative resource for all appraisers. The dictionary is divided into two sections, an alphabetical listing of terms directly related to real estate appraisal and an addendum with topical glossaries and compilations of terms used by related real estate professionals. Find it at appraisalinstitute.org/dictionary7.
Welcome back, everybody. I'm Hal Humphreys. You're listening to the Appraisal Buzz. I've got Keith Murray here with me today. Keith, you You said something before the commercial break about, you had this moment of clarity when you're working at the bank and somebody held the bank up like that. That deserves a little bit more conversation. You were in a bank robbery?
I was in a bank robbery. Yeah. So in the early 80s, as I mentioned, I've been working as an appraiser, having left the mailroom and teller line, but then interest rates skyrocketed to 20%. And so all the lending personnel went back into the bank branches. So it was a Friday afternoon, long line of folks waiting to make transactions. And two gentlemen came in. One stopped at my line and brandished a weapon. And I moved out of the way, and in the largest hand that I've ever seen reached in and grabbed all my cash. And that was when I had clarity that, I had been thinking before about working on my own and working for myself. And it was at that point that I had the clarity and said, it's time. So
Yeah.
that was the beginning of Pacific Coast Valuations.
Wow. That may be the most interesting appraisal business origin story I've ever heard. A lot of us, this, I came to this industry in a really strange way. My father was an appraiser. And I think a lot of people in this business came to it that way. You're the only person I've ever heard came to the business via a bank robbery. So look,
After being trained in the bank, but yeah, I did not have any relatives that were in valuation business at that time.
A lot has changed over the years. I've been certified general since 1992, I believe. You've been in the business for quite some time. We were talking about the forms earlier. At that point in time, forms came in like a hard cardstock glue bound, and you would tear the 2-page form off and fill out the front and then fill out the back. And do you remember the rub-on stickers for location subject comparables?
I'll do you on even better. I remember forms and worms. Now again, I was maybe I was an appraiser savant because I think I was 10. I'm going to back that number. I was 10 because otherwise we start putting math together and folks realize that I'm really old. But yes, I remember getting the boxed forms that came with a little worm inside of it with the stickers. And
Yep.
I know the origins of the phrase "shake it like a Polaroid picture" because that's what we were doing and taping them on. So.
Yeah. So, back in those days, and my father had the Polaroid land camera. We would shake it to dry it off and all that business. And you remember that I don't know, 5-pound metal brick that had double-sided tape on it. You would put the pictures and pull it off and tear it. And then research back then, one of my first jobs in college was going to the courthouse every afternoon and doing sales research for an MAI here in Nashville. Things have changed since then. Let's talk about how they've changed over the years. We've got technology. How many times do your appraisers go actually physically to the courthouse these days?
I don't believe they go very often. I'm sure in the more rural markets they do, but I mean that is probably the biggest transformation that when I look at the landscape is just the availability to the appraiser, but also to their customers, to our clients. And so we moved from a trust environment of the skilled appraiser to trust and verify because there's just so much data out there. That's a great thing, and then and also represents challenges in terms of the interpretation. So I think that creates a great opportunity for skilled appraisers to be able to analyze that data. Right, that's the value that we bring to the process. But it does make for a lot of information flying around the industry.
There are a couple of things that I want to touch on from that, and I'm going to take the last one first. One of the last things you said, it's a really good chance for skilled appraisers to take that vast quantity of information and then analyze it. Going forward in the appraisal business, is it going to be sufficient to get information, throw into a report, check some boxes, and move on?
No, well, and it never was. I mean, I think one of the things that I realized through some of the appraisal education I got and went about the process. I'm an MAI as well, and so going through that process of writing a report and understanding that all the check boxes that are on a form really have in a narrative format a bunch of research and development that leads you to that conclusion to the box you check. And so I think that it's always been the case that appraisers, it is an art, right? That's backed up by the scientific data, but it does take some analysis. And I've always said, particularly in the form business, it's more of a challenge to write a succinct paragraph in a form, because there's a whole lot that you can boilerplate throw in, but that's not the value that we bring. It's understanding, here's what's important of all the things I've looked at, and it really synthesizing that down. So it's never been a case where we could just check a box, but I know that that's sort of how it maybe in some respects has been commoditized in some areas. But I think the appraisers that have survived and thrived have been the ones that have always appreciated that we bring value through the analysis and our experience.
And at the end of the day, the value we bring is we are analysts, and we have to continue to be analysts, and we have to learn how to harness this technology that is available to us today and that is unveiling itself to us as we speak and continuing to get better and more interesting. Where do you see things going from here with technology?
Well, it's just going to continue to advance. I mean, I think it's and the danger in it, particularly when we mentioned the two words, the two letters AI, right, is that you can ask a question, you can get 3 pages of narrative that the unwise appraiser would put in a report. But it also does, allow for some of the task and to uncover data that you wouldn't normally get access to in a much shorter amount of time. So, I mean, what is left for appraisers now, of course, are the much more complex assignments, right? So, I think where the future goes is that we get better at utilizing the tools that are available, and then layering on top of that our expertise. And I think at some point, I suspect that could be done with some form of technology. But I still think that the experience that appraisers have, that back when I was doing appraisers, being in a property, having your sensory experiences come into a report are hard to replace.
Yeah, I agree. And, I've been doing a lot of research on AI and algorithmic solutions to things in the past month. And one of the things I've learned is, so the algorithmic format is relatively new to the appraisal profession. We've got automated valuation models that have been around for years, but they're still fine tuning them. But it's still not broadly accepted. But a place where algorithms have been broadly accepted for quite some time is credit scores. And there was a lawsuit settled last year with one of the credit reporting agencies because their credit scores they had built-in bias into the math. And I think one of the articles I read about this, there was a lady out of Stanford University out in California, and she said the answer is when you have a thin credit file or bad data baked into the numbers from years of what amounts to really bad policy, it is required to have a human analyst look at this data and try to interpret and make sense of it. And I think that's where we as real estate appraisers can bring real value to the table, as that human element to look at the numbers and analyze them and draw conclusions as a human being.
Yeah, and I mean, and since we're Monday after a long football season, it's reps, right? It's repetition, and again, I know that the algorithms do that, but I in the experiences I've had over the years talking to appraisers that know their market and the nuances and the conversations with the brokers in the marketplace, and going to the open houses, I mean, all that's available to look at on a screen, and it's available via data feed, but it's a different experience when you know your marketplace and you're able to articulate that and analyze it.
I love it. Well, let's do this. Let's take a quick break and hear from another one of our sponsors, and then we'll be right back.
LIA Administrators and Insurance Services, serving valuation professionals since 1978. We provide E&O insurance with a commitment to superior customer service, outstanding liability education, and unmatched claim defense, benefiting over 10,000 real estate professionals nationwide. Explore our exclusive appraiser liability education by Peter Christensen and cost-effective seminars designed to foster your growth. Our underwriters, with an average of 26 years of experience each, are dedicated to supporting appraisers. Visit liability.com to discover how LIA can safeguard your business.
Welcome back, everybody. I'm Hal Humphreys. You're listening to the Appraisal Buzz. I've got Keith Murray here with me today. Keith, thank you for taking the time to visit with us for a few minutes. Let me ask you this. We've talked about your past in the business. We've talked about technology and how it's evolved over the years. There's a lot of talk right now about PARIA and the Appraiser Diversity Initiative and ways to get new people into this business. If someone came to you today and said, Keith, I'm 26 years old. I've got a college degree. I'm really interested about this appraisal business. It seems interesting and intriguing to me. What advice would you give that person?
Well, it's the advice that I would give anyone as they go down the career path, and it'd be to find a mentor. And that's what PARIA is all about. But with a word of caution, which would be to choose that mentor carefully. We have been in an industry as a byproduct of technology to be able to work sort of in silos, right? And so back earlier in my career that I got my initial training in home savings, and you can envision a large office with 10, 15 appraisers, the senior appraisers, the supervisors, the younger appraisers, and we were all there sort of able to collaborate and ask questions in real time to help us through the process. And so that's been replaced by us working individually in our offices. We can go online, we can take virtual classes, but I think having a mentor and having one that truly does understand the process and what it is appraisers do. I think for me, what was beneficial is finding mentors in my professional classes. So you mentioned the Appraisal Institute. So as an MAI member, I mean, it was rich, full of folks that had the same idea that I had, that I wanted to pursue appraisal as a profession. And then finding mentors within that space really helped to find those folks that could help me advance my career and make good choices. I mean, inevitably, you're always often in an assignment where you don't really know which way to go. And it'd be nice to, back in the day, you turn around and you'd ask the senior appraiser, but to be able to have that mentor that you can call, it's a service that's a part of how we fulfill our services at PCV. We have, Ask the Appraiser, and it's where we have all of our sort of salty dog appraisers there to take phone calls from seasoned appraisers, but say, hey, I'm just curious about, how I would solve this. And right, it's not related to value. It's just related to, I just need a sounding board to make sure this makes sense before I spend 3 hours of going down a path. And I think that would be, a really important piece of advice, is to make sure that you had a mentor. And the other one would be to really invest in your education and understanding technology. I mean, we mentioned AI a moment ago, and keeping in mind that as an appraiser, appraisers are responsible. I'm not telling you and our audience anything we don't know, is that we're responsible for the content of the reports. So while we can go to any number of sources to get the information, at the end of the day, we own it. And so making sure we are completely familiar with the tools that we use would be another piece of advice I'd give.
Yeah, and I think that's absolutely fantastic advice. And I think you're right. The mentor piece is critical in this because, as you pointed out, a lot of appraisers are working from a home office or an office in their backyard or something like that. And you end up in a situation where you find yourself saying, I've thought about this and I agree with myself, and you can get yourself in trouble by doing that. So the chance to network and meet people and do things like that. So what I would say to someone coming into the business, obviously the Appraisal Institute is a fantastic resource. And if you're going for the MAI designation, it is, look, it's really good education and it's really good mentorship. I did all of my qualifying education through the society. And then when they merged, I went to the Institute to finish up. But the main thing I got out of the process was this network of appraisers around the country that would come together and take classes. And I can call Andy Moy up in Ohio and ask him a question tomorrow, and he's going to take the call and help me walk through a thing. So that's critical. For those of you that are doing boots on the ground residential valuation, there is the National Association of Appraisers, a fantastic organization of boots on the ground residential appraisers mostly. And it's another chance to go to a conference, meet fellow appraisers, spend time with them, get to know them. That's a critical part of becoming an appraiser, is having not just one mentor, but 2 or 3 or 4 mentors, a group of people you can turn to. And yeah, absolutely. Learn how to use technology, learn how to do the research. You can pull your MLS data as, a comma separated value file and drop it into Spark, and it will spit out all these beautiful graphs. But we as appraisers have to know what that means. We have to know how that software puts these things together. So I think that's what you're talking about when you say know the technology, learn the technology. You don't have to know these specific formulas for every piece of the pie, but you do need to know what that software is doing with the data and be able to explain it. Because if you can't, that data is it's just an indication from a machine. It takes that human, that appraiser, to go through and say, here's what this all means. So I think that's fantastic. Keith, again, thank you for taking the time to be here. I've enjoyed chatting with you. I'm going to bring Jim Morrison back in the room. Jim, do we by chance have an anonymous appraiser question today?
We do. And Keith, so what we do is we ask our listeners to send in their anonymous appraiser questions. They can reach out at comments@appraisalbuzz.com or reach out to us on social media. And we'll ask our experts to answer some of the questions that they give us. So this one today says, I'm doing a townhouse. The sketch shows 35 by 20 and 3 levels. When I measure ANSI, I'm coming in lower. This is a little complicated. But
for someone who hasn't done an appraisal for a minute.
Yeah. When I measure ANSI, they're coming lower, which I understand is right, but the comparables sold are in the same unit I'm appraising, but they're all using exterior sketch measurements, and mine are interior, so it brings my value down with the square footage being different. I don't agree that that's right, that my value will be less because they're all new and all connected to the same unit. How do you handle this?
You want me to go first, Keith?
Well, I'll go first, and then I think you're going to give the better answer. But what I understood is that the units are within the same project, so I think there's an opportunity to have communication with the developer, maybe get a look at it to verify, because ultimately it's what's physically there that's important. And I think that's what the appraiser sort of going to have a sense that the numbers may not be accurately reflecting what in fact is there. So that would be my thoughts on how to sort of get to the bottom of it. And I would say one other thing, and it was something you said a minute ago, Hal, and that's with regard to verifying data, right? That's part of our, is that when we get an MLS feed and we get information, there's a phone number there, and there's a broker that can be called, and in this case, maybe a developer that can be called to verify information. So I think that would be the path to take.
Yeah, I agree. And the interesting thing, I'm not a USPAP wonk, but I think USPAP uses the word must like 3 or 4 times maximum. And it is in this context. It says the appraiser must collect, verify, and analyze all information necessary for credible assignment results. So the verification part is key there. I would also say, just because you measure something to an ANSI standard and the other properties are not measured to ANSI standard, it doesn't mean the value has decreased. That's a chance for you as the appraiser to say, I measured to ANSI standards. The other units were not measured to ANSI standards. They're reported based on whatever they're reported on. And then you analyze the difference and you analyze what that means. But I don't think, just because your property has, based on a different standard, fewer square feet, doesn't mean the value changes. I think there's a way to either say the subject is the same as these other properties, therefore here's the ANSI standard, here's what the actual square footage is according to ANSI, and I would double check my numbers and make sure I got them right. And I would also make sure that I'm applying the ANSI standard correctly. But here's what ANSI says. Here's what I'm reporting the square footage as. But in my summary of my sales comparison approach, I would probably go into a conversation about these are model match properties. There is no difference in the square footage. So I'm going to analyze the sales since they're model match, based on the fact that they're probably the same square footage as my subject, and I might approach it that way. It doesn't really matter how you handle it as an appraiser, as long as you say what you did and why you did it. How does that sound, Keith? Does that make sense to you?
Ditto.
Okay, good.
No, I totally agree with that. I mean, and it ultimately it's what the market says, right? So even though the square footage could slightly be different, if the market doesn't recognize that difference, then there's probably no adjustments warranted.
Absolutely. And here's the thing. I get the fear that appraisers have with this issue. I got a letter from a government agency saying you did not bracket the subject with your sales. And I mean, technically, no, I didn't. But they were model matches. And I measured the property to ANSI standards, almost the identical situation. But in the report, I discussed it. And the reviewer from this government agency did not read the discussion where I talked about why I use the sales I use. They just looked at the grid and said, oh, he's not bracketed the sales. So as an appraiser, I understand where the fear comes from. But our job, Keith, I think you would agree with me on this, our job is to analyze the information, say what you did, why you did it, articulate clearly so that your reader can understand what it is you've done.
Well, and as I said earlier, the knowing what's important in your narrative, right? This would be one of those areas where this is what's important, and understanding from an end user perspective what your client's going to want to see. If there's a square footage difference, in simply calling it a model match without explanation as to why the numbers don't reflect that they're model matches would be useful. And I mean, certainly, as I understand it, while things may get flagged because of those, you, for example, didn't bracket the data, the narrative will support your conclusion.
Yeah, absolutely. Keith, thank you very much for being here today.
Yeah, thank you, Jim. Thank you. It's been a pleasure.
Anything else we need to cover, Jim?
No, I think we covered everything.
Okay. In which case, for Jim Morrison and Keith Murray, I'm Hal Humphreys, and that's your Appraisal Buzz for this week.